Many of you are probably nervous about the current situation and are wondering how you might get through these next few months. So today, rockstar mortgage broker Alex Mcfadyen of Thrive Mortgages has generously agreed to do this interview and answer a few questions that you might have about your current mortgage situation. So, hey Alex, how are you doing?
Bob, I am doing well. Thank you very much, considering the circumstances. How about yourself?
Great, thanks. And I really appreciate you doing this. So maybe you can help us understand how does it work when you defer your mortgage?
Yeah, that's a great question, Bob. Basically, it depends on what institution we're talking about. But the most simple premise is what's occurring is a lender is taking what you would have paid down on the mortgage in your principal and your interest, and it's actually adding the interest to the end of the loan. So eventually you're going to end up paying what you would have paid before plus the added interest, and you will end up accumulating more interest on that in the end. That's the most common thing that we're seeing. There are a few other different combinations, one where they're adding a second mortgage behind your property and another where they're skipping a payment and duplicating the payments later down the road. So most common is the first one where the interest just gets added down the line there.
So a lot of people are asking, is it a good idea to defer your mortgage?
Yeah, that's a great question. I'm getting asked that, 30 to 40 times a day right now. So we built a big resource to answer those questions and put out a video recently. And we talked about this isn't right for every single person. Is it a good idea is completely subjective to your situation. What I suggest that people do before they defer their mortgage is they look at a few key factors. First and foremost, do you need it right now? And are you still working? Number two, have you built up a budget? Are there things that you can eliminate right now from a cost perspective so that you can continue to make that mortgage payment? And then number three, what are the long-term implications of doing this? So for example, we don't know if this is going to hurt your credit. Back a few years ago, when the Fort Mac crisis occurred, a lot of the banks said this might not hurt your credit, and then it did. And people were then left with a big scar on their credit, which, if you do not know this, having a missed mortgage payment is one of the worst things that you could have on your credit and could stop you from being able to qualify for a new mortgage. So basically, we don't want to scare people that if it's your last resort, then you should go forward with it. But we recommend looking at other options first, and that's what we're trying to help people do.
So if you were to defer your mortgage, what are the long-term effects, not on your credit, but what are the long-term effects on your equity?
Right. So I guess the first thing to explain is what is equity, of course, is the difference between what you owe on your home and what your home value is. And so what we would see is that you would be adding more interest onto your loan, which means eventually you would have less equity once it's all taken care of. So
Right.
essentially reducing your total equity.
So are all banks and lenders offering the same program for deferring, or are different financial institutions offering different things?
Yeah, good question again. I think we touched on that a little bit, but to go in a little bit more depth, some are offering, for certain people, they're offering up to 6 months if you qualify and you can prove hardship. Some are doing just simply one or two skip a payment. So some of the most common lenders out there are basically just saying you can skip 1 to 2 payments again if you qualify, but then you would have to make your payments. The other one, as I had mentioned, is basically putting your payments into a reserve fund behind your mortgage and adding a second mortgage payment behind that. And that would be anywhere between 1 to 6 months for those lenders. So they're all
Right.
doing a little bit of a different tweak to the program.
Right. So are there any other options for people to get through these times and weather the storm? What's the best thing a client can do right now?
Well, the first thing and the best thing that you can do is reach out to a professional like us who's unbiased. Going to the bank,
Right.
it's actually beneficial to the bank to defer mortgages, believe it or not, in the short term, because they will make more interest. The first thing that we do is we tell our clients that this is the perfect time to do what we call a mortgage checkup and look at your home equity and figure out, have you optimized it properly? A perfect example would be a client that we worked with yesterday. One of the partners is still working right now, and he's making enough income that we could qualify him traditionally for a new mortgage. Now, what we did in their scenario is we took their existing mortgage, their car payments, all of their line of credit debts. We consolidated that into one single payment with a traditional mortgage. So no funky, private business or anything of that nature. Extended out their amortization right now so that their payments were reduced. We dropped their monthly payment from over $2,000 into their scenario of just under $1,000.
Oh, that's amazing.
And that's going to help them. Honestly, Bob, we would do this for people even before this occurred, but this is going to help people focus on getting this done now. Now, what we also did for these folks is we set up a reserve fund for them so that if for whatever reason they needed access to any extra capital over the next 6 to 12 months, they can use it right then and there. Now, there's varieties of this program depending on where someone's at. We also have one for people who literally are not working and need help. But yes, we have a lot of options. We just suggest talk to us before it gets too late.
So if you do consolidate your debt and you get your payments right down, after the storm has passed and people are back to work, then what do you do?
Yeah, so then this depends on the strategy because we're very strategically based. So one of the options for our clients is we set up a now plan and an after plan. If you're someone who qualifies traditionally today and we reduce those payments, maybe our long-term goal was actually to pay off the loan faster. We would use the ability to increase payments to pay down their mortgage faster and therefore save a lot more on interest than what they would have done otherwise. The other option is for someone who maybe is in a more dire straits, who isn't working right now. We have an exit plan already set up. So let's just say, for example, it's a 6 to 12 month window. They're not working. Once they get back at work, we have an out plan where they're able to get back into a traditional mortgage at a lower interest rate and then again reduce their cost of borrowing. So there's a few different strategies, but there's always an exit plan.
Wow, this is amazing. People have options.
It's a good thing.
Yeah, no kidding. So thank you very much, Alex. I really appreciate it. Just one last question. If a client is looking for like a 5-year locked-in term, what is sort of the best rate out there today?
You know, that's a great question, Bob, because interest rates have been changing every 24 hours for the past 3 weeks.
Yes.
So the way that I'm actually going to answer that question is going to be different because if someone's watching this a week from now, it could be a different interest rate. What I'm suggesting for people right now is consider a variable rate mortgage. The reason for that is because right now the banks are increasing their interest rates because of the concern of how long this goes on. What can happen is if you're in a variable rate mortgage, you can actually convert your mortgage into a fixed rate mortgage later. If the rates go down, you can benefit from that.
Right.
Additionally, the next piece on that would be if, for example, you're in a circumstance where you are in a variable rate and the bank has to lower the key interest rate, which probably will happen, your interest rate will automatically go down with it. So I guess there's a two-part answer to your question. You know, fixed rates right now are hovering around 3%, so still historic lows. But the variable rate might make more sense, especially for future planning. And that's not what a bank will tell you because they will make more money on that fixed rate.
Of course. So if you're interested in finding out more about your specific situation, feel free to reach out to Alex from Thrive Mortgages anytime. He's a great guy and we'll be happy to take care of you. And in the meantime, if you're wondering what your house is worth or you're considering buying, feel free to give me a call. I'd love to help you.
Thanks, Bob. I really appreciate you being an awesome resource to your clients. And I look forward to chatting with anybody who needs any help. Talk soon.
Thank you very much, Alex.